All right, so this is just inflation Canadian. We're going to focus on Canada. Like I said, numbers are going to likely be out next week, I believe, sometime. So this is the 1 year chart, how we've seen it trend. So up hitting a peak of around 8.1% in May. It's pulled back here to 6.9%. So I want to focus in on the specific contributors to inflation, just in the recent period that we have data for. So these would be the September numbers that were released in mid-October. And then the October numbers are going to be released shortly. So this is CPI for the month, annual CPI. So compared to September in the previous year, you can see all items at the top, 6.9%. So that's the average. And when you look through this list, you can see it's some pretty high numbers, almost right across the board. But there are three items here that are the lead contributors, or have been the lead contributors to inflation over the last year, to the 6.9% figure. So we have food here at 10.3%, we have gasoline 13.1%, and then we have energy at 14%. So other contributors as well, but these are the top three. But what I want to do is switch now. So typically when you're talking about inflation, a lot of people focus on that yearly figure, which right now is 6.9%. But we're going to switch now to the monthly figure. So this is the September data compared to August, so just the month before, and inflation increased 0.1%. And I want to take a look at the items that were the biggest drivers over the past year, right? So food, still pretty heavy inflation, 0.7% for the month. But when we go down to gasoline, down 7.4%. And then we take a look at energy, down 4.4%. So we can see here that some of the big contributors over the last year have actually been deflationary over the past month, right? And we're going to take a look here at the monthly inflation rates, essentially going back to last October, so the last year. And if we look at October, November, December, Q4 of last year, we can see we had a little bit of inflation, but where it really started to accelerate was in January of 2022. So we had started at 0.9% monthly inflation, then 1%, 1.4%. But these were the big months, all the way up to about June. And then from June, over the past 3 months, so the July, August, September numbers, we've actually seen inflation come down. The monthly inflation numbers come down quite a bit. So 0.1% in July, negative 0.3% in August, and then 1.1% in September again. So the Bank of Canada started raising rates around March. And everybody knows there's a multi-month lag period before we start to see that effect. But it does appear here that it has had an effect, because the monthly inflation rate has declined significantly. So I want to see what we can do with this, have a little bit of fun. I don't know exactly what the forecasts are for the upcoming month that we're going to see soon. I believe that it's actually negative 0.1%, but don't quote me on that. It doesn't really matter. We're going to see those numbers soon. But we're just going to do a little forecast here and see how does inflation trend when we just extrapolate these results going forward. So assuming that that what we've seen in terms of the last 3 months of inflation has been the result of rising rates, or at least a large part to rising rates, what would inflation look like if we were to extrapolate that going forward? So we put together this entertainment informational forecast of inflation. And what we see here is that, assuming this holds, this lower inflation rate holds, for the rest of the year, we really don't see that much of a change in inflation. It stays stubbornly up in the 6% range. But then once we get into January of next year, we start to see a major change, starting off the year in January at 5.5, going down to 4.5, 3.2 in March, 2.7% in April, and then 1.3% in May. And that's because as we get into those months where this year we had the highest level of inflation, once we get into those months in 2022, those numbers are going to be out of the equation. And this is essentially where I think investors can start to look for inflation declining. Now, is this a good model? Is this a good forecast? Should we base our investment decisions on this forecast? No, absolutely not. That's insane. This is just to kind of show what's going on, what the trends look like right now. And, the main point here is that we're making the assumption of a 0.1% growth in inflation on a monthly basis going forward, right? It's not going to be 0.1%. It's going to be something else for sure. It could be lower. It could be higher. We don't know what's going to happen in Ukraine. We don't know what's going to happen with relationships with China. There's a lot of other factors that come into play. But certainly one thing that we can see is that a major driver of inflation has been energy. That has come down, at least for now. And there's also some trends appearing in the labor market as well. I mean, the labor market has been incredibly tight, red hot, but we are starting to see some of that change. So a lot of tech companies have been announcing layoffs, big layoffs, like Meta is laying off 11,000 workers. Many of the companies, like even Microsoft, they're announcing hiring freezes. And I was just even looking at some data in the semiconductor industry, for example. They very quickly have gone, a couple months ago, just 3 months ago, if we're talking about semiconductors, we're talking about a major shortage of chips. Now they're actually in an oversupply. They have too much inventory. So they're probably going to delay some of their capacity expansions that they have planned. They're not going to be hiring people. In some cases, they're going to be laying people off. Transportation issues like logistics, container shipping prices, those things have come down back closer to normalized levels. So there is good reason to believe, potentially, depending on what else happens, that these lower monthly rates of inflation should persist. So I'm going to make a forecast here and another forecast. And this forecast is that, assuming that this information holds, that we are going to see the Bank of Canada is scheduled to meet again, potentially raise rates again in December. I think it's around December 9th. It really is difficult to say. I say that if we're hanging around at this 0.1%, or if there's not any big surprise in inflation, they probably don't increase. But if they do increase, it'll be a small one, and then they finish there, right? And then we start to see them decrease at least a couple of times around the end of the first quarter. Now, once again, should anybody rely on this prediction or make any investment decisions based on this prediction? No, don't do it. We're just having a little bit of fun here looking at the data. But at the very least, we're seeing some hope. We're seeing a light at the end of the tunnel. And if we're in a situation where the market sees that the central bankers are not going to be increasing rates anymore, and we're potentially looking at some stimulative activities over the upcoming quarters, then I think that stock prices will likely respond positively, because a lot of the overvaluation, not all of it, but a lot of the overvaluation has been taken out of the market. So that's my prediction. That's my forecast. Laugh at it. Don't listen to it. Don't use it as investment advice. I don't claim to have any ability to predict the future. There's a lot of things that can happen to derail this model and the assumptions. So just take a look at the data, and that's about it. Come to your own conclusions.